Risk assets, including crypto, seem to be kind of going boring, is the way I would describe it. Is going nowhere for a little while. That's happening as new research from Chicago Fed economists suggests that the central bank has raised rates, interest, particularly Fed funds rates, enough to take care of that 2% inflation target without having a recession. Well, that's just one Fed's opinion. What about everything else? Joining us now to discuss is eToro U.S. investment analyst Callie Cox. Welcome back, Callie.
Hey, happy to be back. Happy Friday.
Oh, happy Friday. You said it. Thank you. So let's talk here, economists here, and also Fed presidents and the like, because we kind of hear a lot of mixed messages. On the one hand, here we have the Chicago Fed economist saying, yeah, this is enough. On the other hand, you hear from others like, there might be some room here. But it looks like the market kind of is betting, for the time being, that September, no rate hike. First of all, is it enough? Who do you think is right here? Second of all, will there be a hike? Are you going to be an outlier here for September?
Yeah, two very good questions. So let's start with the first one. Who's right? I don't know if the Fed even knows what they're going to do in September. And I say this with a very serious undertone because, the Fed has said over and over again that they're data dependent. And yes, we do get mixed messages from Fed speakers. I think that's one of the cons of, having greater transparency from the Fed these days. Different Fed members have different Fed opinions. There are research teams at different Fed banks that can say different things. And I think the underlying, motto that you need to grab from that is, just be careful with what you listen to. On the rates part, if we see a rate hike in September, where are we? If we see a rate hike in September, it's plausible we could see it happen. But right now we're telling customers to focus on the fact that rates could stay high for a while, because a 25 basis point rate hike, if it happens, is just a blip on the radar when you consider that rates have already been hiked 5%, and there's already a lot of pressure on the economy.
Yeah, a couple of things on that point. First of all, you kind of almost missed the days when the only signals you got were like what briefcase Callie Greenspan was holding. I don't know, you're too young to remember that, but I remember that. It was like different types of briefcases told us what could be happening. Like it was like kind of a form of Kremlinology, another term you probably are too young to understand. But it was and nonetheless, that's kind of like something that happened. And as you pointed out, is maybe the fact that there is all this transparency, particularly under Powell, a problem. I mean, like, is it actually making things worse for the economy because people can't, and particularly the bond markets, can't quite judge what's going to happen even more so? I mean, it's sort of, is it too much of a good thing?
I actually think it's an effective tool from the Fed's point of view, because the Fed can test out different policy stances and different, ideas and see how investors and consumers react to them. Of course, that makes it more confusing for investors because you get more signals and people like to hang on to Fed speakers' every word these days. So I think it just depends on where you're sitting. And I could also see some pros for investors too, especially if you like trading volatility. But it does require you to change your almost change your strategy when it comes to, trying to read the Fed's tea leaves. If you're a long-term investor, 99% of what the Fed says doesn't really matter to you, and you need to focus on, what you're seeing from the economy and earnings.
Speaking of reading the tea leaves, it seems that economists are also divided on if a recession is looming in the U.S. What are your thoughts there?
Yeah, so there's certainly a lot of pressure on the economy right now. And we've been one of the more optimistic firms out there, saying that the job market is strong, consumers are spending. It's really hard to be in a recession when consumer spending is 70% of the economy and those two conditions are in place. Obviously, we're seeing the job market weakening. I'm a little concerned about the pressure valves we're seeing in higher oil prices and a stronger dollar. I mean, both of those can strain the global economy and put a lot more pressure on consumers' wallets. So So, I see the, bias towards cyclicals out there. I see the fact that speculative coins are picking up, and, we're just warning customers to be cautious here. Don't fully step out of risk, but just be careful about the risks you take. Look for that quality risks or, companies and protocols that could survive a recession if it happens.
Getting back to this whole idea of risk, here we are. We have the Fed funds rates at 5%, probably headed north, further north. What doesn't that kind of create a hurdle rate for taking on that extra risk that some of these outliers, these altcoins, just can't match, given the costs of borrowing? Is there a long-term problem ahead for altcoins? And by altcoins, I don't just mean, kind of like the bottom of the barrel. I'm talking about some of the top 20s. Is there something to be, I don't know, just kind of like maybe that's just a risk too far?
Yeah, Lawrence, I think you hit the nail on the head there. When rates are high, investors have to be more skeptical about where they put their money because that hurdle rate is higher. I mean, we've seen that since the beginning of 2022 when the Fed started raising rates. And if rates remain at 5% or even higher than 5% for a bit, that hurdle rate is 5%. And investors are faced with this choice of, putting money into a money market fund, getting 5% or a little bit more, or taking the risk at higher rates and stepping into an altcoin that's a little more speculative. And that is essentially a projection of the future. And we all know the time value of money. When rates are high, the future of the value of a future dollar decreases. So take that all into consideration. There's less money out there, less appetite to take on risk. And, when there's a finite amount of money, a finite amount of funding, it may flow to more quality sources. And that's the base of our opinion here. I mean, look, altcoins are exciting. I understand the reasoning and investing behind them. And I think, the types of investors who invest in them like to learn more and they like a little bit of action. But at the same time, if you're a long-term investor, you have to realize that altcoins are a little behind the 8 ball here. And they're at a disadvantage because they don't have that utility yet. They don't have, those cash flows that people will, search for in a high rate environment.
All right, we got to get Bitcoin into the fold here before we go. You have a few encouraging storylines about Bitcoin. Talk to us about what those are.
Yeah. So speaking of utility, I mean, I think it's very encouraging for crypto investors that we keep seeing headlines about how Bitcoin is finding its way into the mainstream market. I mean, yesterday we saw the news that JP Morgan was considering decentralized tokens for, showing different securities. Of course, we got the grayscale ruling last week. I mean, all of these are evidence that, institutions are looking into Bitcoin. We're taking steps further. And I'm not a Bitcoin maxi, let me be clear here. But when you look at crypto as a whole, you need to understand that there are different levels of risk there. And I've been saying for a while, crypto needs to prove its utility. I think it's happening in certain spaces. And we're seeing that most prominently with Bitcoin and Ethereum and, specifically Bitcoin over the past few weeks.
All right, Callie, thanks for joining us. It's always a pleasure having you on. I hope you have a good weekend.
Yeah, thank you. Y'all too.
That was eToro US investment analyst Callie Cox.